Welcome to Wall Street Confidential. I'm Farnoosh Torabi. We're discussing a tried and true, a very favored way of analyzing the financial markets. You may do this at home. It's looking at charts. And my guest, Jim Cramer, today, you actually spent the weekend looking at some S&P charts.
You know, I used to do this all the time when I was at my hedge fund. I was hoping that I would never have to work as hard as I did then, but this market's so hard.
It's tough.
That I've gotten back to a schedule where they deliver, the S&P delivers the charts to my house, and it's the hard copy, so it forces you to look at each one. And now, by no means do I want to say that I'm a chartist. I am someone who likes to look at the physical stimulus of looking at the chart, then causes me to think about what's happening in the market. And I think that you can understand, given the fact that the market's come down a lot, you would like to see a lot of charts that look interesting. As is often the case after big declines, nothing looks good. And that's because everyone keeps selling because the charts don't look good. I mean, it's kind of a vicious circle. But there was almost nothing to buy, and it was quite disconcerting.
What are the housing charts looking to you right now?
They're the only ones that are looking good. Now, I heard someone on CNBC talk about that last week, and Dylan Ratigan, who's my friend, just hammered the guy because it's not enough to look at the chart. I checked in with Helene Meisler, our chartist at realmoney.com, who's so great, and I've used her for 20 years. And she was adamant, too, that, look, you know, they do look like they're bottoming, but they've looked like they've bottomed before and they've failed. I can't find I know that the correlation between Fed interest rate cuts and home building is, of course, etched in stone, so theoretically you should buy them. As is often the case that I found with financials, the common stock doesn't seem to represent the best chance. You know, there's probably bank debt that's better for the houses. But, yeah, I mean, they were the only group that really kind of looked good.
That's
that was very
just,
Centex, KB in particular. KB Homes looked really good. And now, KB Homes is, I can't imagine what could be worse. A California home builder, chiefly. Well, they're in a lot of other states, too. But they have fixed their balance sheet. And if you believe, I guess, that there could be a turn in housing in the next year, this would be an interesting play. What I found most disconcerting is that these are the group that I have nothing. I have no earnings to go on. I have no case other than hope. So when I see situations like this, I say they're the bottoming. It's almost like I wish that they would show no bottom. Now, because some people like to invest on irony, that's never been my style. These were the stocks that let us down. They were the first to go, so maybe they're bottoming now. But without something, as is often the case with the chart may be telling me something that I can't see from the fundamentals. So I'm open-minded enough to think that maybe this is an important thing that I see these stocks bottoming. But I really am then again mindful that Helene said that they've tried this before and failed.
All right, thank you so much, Jim Cramer. By the way, Steve Smith on Real Money, he's a big chart analyst. So if you're looking for some more analysis on that, please check out that on Real Money.
Right, he did say, please stop looking just at the financials, which I thought was a very good column.
Yes, all right, check that out. Thank you very much, Jim Cramer. This is Wall Street Confidential, only on TheStreet.com TV. Stay tuned.
That's your action point. Take advantage of it.